Hi everyone, welcome back to the channel. This video is a part of the monthly portfolio update series that is made for the benefit of the individuals who are invested with me on Etoro about the performance over the past month, the current holdings, and also my expectation about how the portfolio will fare moving forward. At the moment, I've got over 400 individuals invested with me. If you are interested to know more about the platform and how you could invest with me, there's a link to another video in the description below that goes over that. For the month of February, we are down 9.82%, and for the year, we are down 11%. We are fully invested in 5 companies: Alibaba, Prosus, Discovery, Pershing Square, and Seritage Growth Properties. February has been the worst performance in the history of the portfolio, and that has largely been driven by global conflicts. The primary reason was due to the fall in the value of the Russian and the Ukrainian investments made by Prosus. Sanctions have caused the values of these investments to reduce significantly, along with a crash in the currency. So initially, Prosus stock was dragged down by the South African index. Then it was impacted by the fall in the stock price of Tencent. And now it is impacted by the sanctions and the war between Russia and Ukraine. Due to the sanctions, Prosus management has taken the decision to write down its minority stake of 700 million in Russia's VK Group and also pledged to support those affected at OLX Ukraine. Moving forward, I will not be surprised to hear that management has started engaging in more share buybacks since they had recently raised over $5 billion through the issue of new medium to long-term bonds. I view Prosus as a compounder that is trading far below the value of the assets that it controls. It is grossly mispriced by the market, and hopefully its value acts as its own catalyst. The next company in the portfolio that I'll be covering is Alibaba. When it comes to Alibaba, it is the most talked about stock since the price is extremely volatile. Every bit of news seems to have an impact on the stock price. When you really boil down to the essence of what you are getting for the 250 to 300 billion, which is the market cap of the company, it is one of the best e-commerce businesses in the world with a whole side of optionality in the form of the cloud business, Ant Group, and a whole bunch of different assets that they control. I get that there is uncertainty with the whole China risk, global tensions, and all that. But I'm not at all worried about the position because the real risk of permanent loss of capital is quite low at the price that we were able to buy into the company for. The next company in the portfolio is Seritage Growth Properties. There's been some very interesting news from the company that management is looking for strategic options to expedite shareholder value creation. Our average cost basis for Seritage is around $13 per share, and I would be very, very surprised if we get anything less than $20 per share in the event that there's a buyout of the entire company. The new CEO has been a lot more vocal about the underlying value of the assets that Seritage controls compared to the previous CEO. Within the next 6 to 12 months, we should see some dramatic changes in the stock price of Seritage. With that, I hope that you have a better idea about the companies that we are invested in and how I'm thinking about the overall portfolio moving forward. If you have got any questions for me, then do mention them in the comments below. And if you would like to connect with me on Twitter or on Instagram, then links to those platforms are in the descriptions below. Thanks for taking the time to watch the update and have a great day.